In recent weeks, BMNR has been highly volatile, with its price climbing up into the $60 range twice, as well as falling back down into the $40 range twice as well. However, despite all the price volatility, the fundamentals of the business still remains intact. Now, if you really want to know more about the fundamentals of this company, I've covered it in the previous video and I'll link it down below as well as up above for you. However, after understanding the fundamentals of this business and after understanding the key metrics that you need to track that tells you more about the health of the business, I think what is more important today is putting all of this information together in order to help you determine the valuation of BMNR. And so, as always, potential is a dangerous word, so let's dive in. There's this common misconception that BMNR only works if Tom Lee keeps buying, and I want to start this video by telling you that that is absolutely not true. You see, even if Tom Lee keeps buying, BMNR can fail if we do not see businesses and Wall Street move on to the blockchain, and of course, if we see stablecoin adoption start to fade. Now, at the moment, this really isn't the case, and one of the ways that we can actually track this is by looking at this metric called the TVL, or the total value locked. Now, this basically represents the total amount of capital that is up in smart contracts on Ethereum. Now, I'll touch a little bit deeper on this in another video, but you can see over here that in terms of the total value locked, Ethereum has the majority in terms of the market share among all the other blockchains, with around $84 billion of capital locked into Ethereum smart contracts. And so, if you consider what Tom Lee has put out in his BMNR presentation recently, the total addressable market for Ethereum is basically the entire US banking system, which stands at around $3.8 trillion today, and it is still growing. And so, with only $84 billion moved onto Ethereum as a total value locked, we are only really just getting started. The whole premise of BMNR is that they believe in the tokenization of Wall Street and that this tokenization will occur primarily on Ethereum because Wall Street cares about having 100% uptime, and that is what Ethereum can provide, that kind of reliability and stability. And we are starting to see that play out in various ways. So recently, we have seen news around Swift experimenting with on-chain migration using an Ethereum layer 2 called Linear, I believe, as well as BlackRock launching their first tokenized fund on Ethereum. I think this happened sometime in 2024, if I'm not mistaken, as well as the SVP of blockchain from PayPal, Fernandez de Ponte. He was talking about how stablecoin can act as the infrastructure layer for payments as well as remittance. And of course, we are also seeing news where MasterCard are enabling stablecoin payments. So BMNR really sees themselves as this benevolent entity that is securing the network by being a validator on the Ethereum network. And they plan to do so by owning around 5% of all outstanding Ethereum, which would be around 6 million tokens. Now, I know in some recent interview, Tom Lee has said research has shown that it is actually okay for them to get to 10% ownership of Ethereum without compromising the integrity of the network. But at least for this video and in a few subsequent videos, I'll be using 6 million tokens as a reference to this 5% number, because the alchemy of 5%, right, is something that investors are familiar with when it comes to Tom Lee's thesis around BMNR. And also because the supply of ETH is elastic, I think it really depends on the burn rate and the supply of ETH. But by and large, there are around 120 million circulating tokens of Ethereum. And so that is how we get the 6 million numbers, 5% of 120 million tokens. Like I said, I will really get deeper into this in another video. But the idea over here is that BMNR does three things, right? It provides Ethereum liquidity for Wall Street via a stock. It also acts as a validator for the Ethereum network and participates in the governance of the network. And Tom Lee believes that they can act as some sort of a sovereign put, right? So basically, it's a floor when the market gets too low. The market can be sure that BMNR as an entity that is holding ETH will be buying at certain prices. Now, BMNR are only able to do this in a way that is accretive to shareholders if they can command a premium. Now, there's a very quick note that I want to make over here. A lot of people say that because this is only possible if they command a premium, that makes this entire thing a Ponzi scheme. And the issue that I have with this line of thought is that many stocks out there trade at a premium. I think if you look at Palantir, if you look at companies like Robinhood, even Tesla, they trade at a premium of earnings that have not yet happened. So I think the fact that BMNR trades at a premium doesn't make it a Ponzi scheme. Neither does Palantir or Tesla or Hood trading at these valuations make them a Ponzi scheme. Because to me, something cannot be a Ponzi scheme if the reasons that investors are choosing to assign a premium is actually valid and fundamentally sound. Now, you can choose not to believe in a narrative around Ethereum and you think that it shouldn't trade at a premium. That is fine. Same way, people are free to think that Robinhood, Palantir, Tesla doesn't deserve to trade at a premium. Sorry, that is perfectly fine. But at the end of the day, fundamentals do play out, and BMNR shareholders have to be likewise aware of macro factors because the premium that BMNR enjoys right now can compress. Of course, BMNR does have ways around that, but I think I'll address that in future videos. Now, in this next segment, I'm going to be playing you clips from this podcast that Tom Lee was on. This is actually one of the episodes on the Bankless podcast where Tom Lee really helped me to understand the valuation of BMNR and the value proposition of BMNR, and that eventually got me down this rabbit hole. Now, over here, he basically breaks down the valuation of BMNR into four parts. The first being capital appreciation of the underlying asset, which is Ethereum, the staking yield at 3%, as well as a liquidity and velocity premium. Now, he then goes on to explain how he will value BMNR based on all of these things. But let's listen to the podcast first, and then I'll pause at certain points to break down the important parts for us and perform certain calculations so you understand how he's looking at BMNR's valuation.
But why is there an MNAV premium in the first place for any crypto treasury company? Can I walk you through that? Because it's a very good question. Okay. I want to start with a numerical thing and then give you the non-numerical. Let's say that someone buys us, and BitMine is very strict on cost structure. So it's basically with $3 billion of Ethereum, let's say, you're like, okay, you're just an ETF. So let's say you put it at 1 times NAV, okay? But then there's a native yield of 3%. And let's say you pay that out as net income. But let's say you go, let's just give it a money market multiple. So 5%, you gross it up. So it's a 20 times multiple of your 3%. That's adding 0.6 to your NAV because of what you earn on the yield. Does that make sense?
So we're already at 1.6 just because of ETH staking yield, basically.
All right. So at this point, I just want to pause it a little while and to explain to you what Tom Lee is saying, right? Because he goes on this explanation, tells you how if you look at BMNR as an ETF, then there is capital appreciation. They should be trading at least 1 times NAV. And then on top of that, you have this 3% staking yield. And if you apply a 20 times money market multiple, that's how he gets this 0.6. So I'm just going to break this down for you so that you can understand this is not just fluff. This is not just numbers that he's pulling out of thin air. So I'm going to bring you to my spreadsheet over here as we break down Tom Lee's valuation. So I'm going to shift you over to this side of the spreadsheet so that you can understand what we are talking about. Now, basically, like I said earlier on, there are 4 factors that Tom Lee considers, which we are calling a sum of parts valuation. And we value each aspect of Ethereum separately and add them together. So over here, I want to focus on the staking yield. Now, Tom Lee in this blue box over here has told us that the staking yield for Ethereum is around 3%. Right? So the price of Ethereum today is around $4,000, which means that if he stakes ETH today at $4,000, at a 3% yield, Tom Lee will be receiving around $120 in terms of cash flow every single year. Now, but as an investor, I'm not just going to go out there, put my money into the first asset that I come across, right? I'm going to look around and see whether or not there are better deals out there that can still give me $120 in dividends. So let's say someone comes along and tells me about this market fund called money market fund ABC, and they tell me that this ABC actually gives me a 5% yield. Now, earlier on, with the Ethereum example, we have already established when I stake my Ethereum, I can receive $120 in cash flow in dividends every single year. So what this means is that if I buy ABC money market fund, I want to also receive at the very least $120 in cash flow. Now, I know that the yield of ABC fund is 5%. The annual dividend that I want to receive, which I'm typing in over here, is $120. How do I find out the price of ABC? Very simple. I take $120, divide by 5%, and we find out that the price of ABC Money Market Fund is $2,400. And so with all of this information presented to us, ladies and gentlemen, just compare the cash flow. Okay, I'm not talking about capital appreciation. If I'm just looking at the cash flow, would you rather invest $4,000 to stake Ethereum at 3% and receive $120 every single year? Or would you rather invest $2,400 in ABC Money Market Fund over here and also receive the same $120 every single year? So therefore, if you are willing to pay $2,400 for a $120 cash flow every single year in terms of dividends, what you end up doing, or how Tom Lee gets to this 20 times multiple, is that you take the price that you're willing to pay for ABC Money Market Fund, 2,400, divided by the cash flow, 120. So you're seeing this over here, 2,400 divided by 120. So what you're paying is 20 times cash flow. And so that is what Tom Lee means by, a money market fund multiple of around 20 times. Now, how does this translate to a 0.6 times net asset value? You see, I'm not willing to pay $4,000 to buy Ethereum to get a 3% yield if I can get a 5% yield with ABC Fund, which means the maximum I am willing to pay for a $120 dividend is actually $2,400. Now, does that mean that Ethereum is overvalued? And here is where, the real nuance of this discussion comes in. Because if you are purely looking at the cash flow, then it seems like, I would rather put my money in this ABC Money Market Fund that yields 5%. Why would I want to stick my Ethereum that grows at 3%? You see, when you put your money into the ABC Money Market Fund, just by the way a money market fund is structured, your capital will not grow because the fund is generally pegged to $1. However, the price of Ethereum is dynamic and it is likely that we will see future capital appreciation. So therefore, apart from pricing in the cash flow, we have to price in the potential for capital appreciation. And so putting these two things together, you're really seeing the first two parts of Tom Lee's valuation. Now, the first thing he tells us is that if you look at BMNR just purely as an Ethereum ETF, then they should at the very least be valued based on their underlying assets. So if you assume that BMNR holds one Ethereum at $4,000, then their stock should be worth $4,000, which is 1 times NAV, right? Because the price of the stock basically is equal to the price of the underlying asset. Now, and what we have just done with that calculation is to say that on top of this $4,000 that we are paying to own the asset, we also need to value Ethereum for its cash flow. However, Ethereum's cash flow is only $120. I'm not willing to pay $4,000 just to make $120 in cash flow because I can do the same, I can do even better in ABC Money Market Fund. And so because of that, I'm only willing to pay $2,400 for the Ethereum's cash flow. Now, $2,400, if you divide by $4,000, which is the price of Ethereum, will get you this 0.6 NAV that Tom Lee was talking about. And so because of that, if you value Ethereum as an ETF, you should value them at 1 point NAV. And the cash flow of Ethereum is not worth $4,000, but it is worth $2,400. And so this $2,400 is equivalent to 0.6 times NAV. And if you put these two numbers together, that's how you get 1.6. And that is where we find ourselves in the discussion. And so with that, let's carry on to the video.
There's two other components to value. You have to account for velocity, because when we started the ETH strategy on July 8th, there was only $4 of Ethereum held per share. And now when we announced on July 27th, there was $23 of Ethereum held per share. And it's much higher today. We haven't disclosed it, but it's higher. So it's grown by $19 a share in 20 days, roughly. That's velocity. You have to give a velocity because when you do NAV, the NAV is growing. So you have to give a multiple to that NAV growing. MicroStrategy is getting a 0.7 for adding 16 cents of Bitcoin a day, but we're doing it 12 times faster. So if you did the theoretical math, we should be getting more than, it should be 0.6, which is MicroStrategy's premium, but 12 times faster times 12. Now, I'm not saying that'll be what's priced, but think about it, that's like 6 points of NAV. So that's just velocity. And then there's liquidity because, after MicroStrategy trades about $3 billion trading a day, we're the second most liquid crypto treasury out there because we trade 1.6 billion a day. Like Metaplanet, for instance, and I'm a big fan of what Metaplanet's doing, but they're trading like, I don't know, $50 million a day. So we have like a quantum log function of liquidity. So that should be worth a premium too. So I think like Bitmine just should be 1 times plus the yield gives you 0.6, so 1.6. And then how much value do you give for the velocity? And we know MicroStrategy is getting 0.6 for adding 13 cents a day, and we're 12 times faster. And then what's the premium you should pay for liquidity? Because liquidity is how you can issue other instruments at lower cost.
So there's a liquidity premium to this product.
And a velocity premium.
Yeah, the liquidity premium you get by being kind of the biggest and baddest and kind of like deepest, right? But the velocity premium, which is kind of interesting, let's dig into that, because there's the velocity of you in the first month you've moved 12x of the speed of MicroStrategy. The question though is that sustainable for the next, let's say 11 months, right? For an entire year. Talk about that. So how are you able to get that level of ETH velocity in terms of your purchasing, and can that level actually be maintained?
Well, that's a function of liquidity, right? So it's liquidity and velocity are like 2 aspects of the same characteristic. We're able to have a lot of velocity because of our liquidity.
All right, I think that is a good point to end the video. We have a lot of velocity because of our liquidity. Now let's break this down a little bit. Tom Lee is actually suggesting that on top of the valuation that we are doing for BMNR, based on looking at it as an ETF as well as a cash flow, there should be a velocity premium and a liquidity premium. Both of them are a function of one another, right? So the whole idea over here is that because they are a highly liquid company on the stock exchange, they are able to raise capital easily. And the more capital that they're able to raise, they're able to acquire ETH at a faster pace. That is the basic premise of what he's saying. And so he's actually suggesting that he feels like BMNR should receive a velocity premium based on how fast that they are accumulating ETH. And the example he uses is actually MicroStrategy, ticker symbol MSTR. Now he says that they are accumulating Bitcoin at around 16 cents per day, and they are receiving a 0.6 times premium. But because BMNR is actually accumulating ETH 12 times faster, now he's implying that because of that, they should receive a 12 times 0.6, around 6 to 7 times NAV. Now, he was very careful over here. He did specifically say that he doesn't think that this means that BMNR has to necessarily trade at that level, but I think he's looking at it purely from a mathematical perspective that seems possible. So it might not be a 6 times NAV, but he thinks that they do deserve some sort of premium, and the premium that he thinks they deserve should be higher than MicroStrategy because their pace of accumulation is faster. So let's just put it at that. Now, on top of the velocity premium, he actually talks about a liquidity premium where the host actually asks him, can you keep up this velocity? And he says that we are able to keep up this velocity if we are able to drive liquidity. So he suggests that BMNR deserves a liquidity premium for being one of the most liquid stocks on the market. And the important thing about BMNR strategy with liquidity is, like I said, they're able to raise capital at a fast enough pace to accumulate ETH. But this is really where I have a little bit of issue with his assumption, because I don't believe that BMNR should really be trading at 12 times the premium of an MSTR just because they're accumulating Ethereum at a 12 times faster pace right now. To me, I think comparing where BMNR is and where MSTR is right now is like comparing Robinhood to like Charles Schwab or SoFi to JP Morgan or Bank of America. I think it's more realistic to compare BMNR's pace of acquisition on a quarter-over-quarter basis based on its own past performance and to see whether or not they can keep up the same pace of accumulation. You see, I think MicroStrategy is a much more mature digital asset treasury, and so the comparison with BMNR, to me at least, really isn't apples to oranges, right? I think because BMNR just started its ETH accumulation strategy, it's only natural that they are fast out of the blocks. And of course, I think Tom Lee has been able to maintain a pace that nobody really has predicted. But I think we all know that this at some point will definitely end. And when it does end, does it mean that if BMNR deserves a 6-time premium for its velocity, that once it slows down or once it stops accumulating ETH, its price should be slashed by 6 times? I don't think that is what he's suggesting. And so because of that, I don't think they deserve that big a premium over MSTR just because they're accumulating ETH at a faster pace. And I think if you look at BMNR's entire business model, what you would realize is that perhaps in this stage of their business, the early part of the business model, it seems like liquidity and velocity is the biggest driver of revenue for BMNR. But if you extend this out 5 to even 10 years, then it no longer becomes the driving factor for BMNR's valuation. It becomes ETH adoption as well as the staking yield that they receive. But more on that in another video. So therefore, I think what actually makes more sense to me is that since MSTR receives a 0.6 times premium for its combination of liquidity and velocity, I think BMNR should be attributed a similar premium. Because they have a similar business model, it's just that they're earlier on in the business cycle and therefore growing faster. You see, the problem I have with this valuation, if I put it very simply, is that a digital asset treasury is not a typical business model like SoFi, like Robinhood, where growth can keep accelerating. There is a cap to their growth, and I believe because there is a cap to their growth, then there should be a cap to the premium over liquidity and velocity as well. I mean, if you take, for instance, on the 20th of October, BMNR actually made this announcement where they purchased a bunch of Ethereum. Now, in that particular announcement, if you compare their liquidity on the 20th of October to a week ago on the 13th of October, you would realize that they fell from the 22nd most traded stock in the US stock market to the 33rd most traded stock. So if you want to assign such a huge liquidity premium to them, does it mean that because they fell 11 places that their liquidity premium should be slashed? Like I said, I don't think so. The reason, because like I said, two things: driver of value right now comes from liquidity, but in the long term, it comes from ETH adoption as well as staking yield. And secondly, there is a limit to how much they can grow, right? So eventually they will get to that point, perhaps in 2 to 3 years' time, which means that runway for growth, that runway for liquidity and velocity to play out is not that big. And so because of that, there's a cap to how much they can grow. There should be a cap to this premium as well, which is why I feel a lot more comfortable using the same 0.6 premium for MSTR as I do for BMNR. So if I go back to the spreadsheet over here and I assign a 0.6 times NAV for velocity and liquidity, this brings BMNR's net asset value to around 2.2 times. And so with this, I'm going to be using this for the valuation later on. And with that, I just want to jump into the spreadsheet that we are seeing over here. So this spreadsheet over here is what we are using to track BMNR's valuation. You can see the price target right now stands at around $79.95, as well as an upside of around 58.6%. Now, this changes from day to day based on the number of days we have to the target date that I'm putting out over there. Currently, the stock price of BMNR is around $50.41 with a market cap of around $14 billion. Now, in terms of the number of shares that I'm using, currently I'm using this 313 million shares that was actually reported in Kerrisdale short report. Now, just a caveat over here, I'm using the number of shares in that report because that is the latest estimate that I can find. But if you're talking about the short report itself, I don't think it makes a lot of sense, right? And so based on the current price, I think the MNAV currently stands at around 1.1 time over here. I'm not going to talk about the EPS and all that because that is me modeling in their staking yield later on. So right now, the price of Ethereum stands at around $4,070. And as of the last reporting, I have shown you their ETH holding currently stands at 3.236 million ETH. Right, in terms of cash on hand, they have around $219 million, 192 Bitcoin, which is worth around $22 million, as well as their investments in 8Co, which is worth $113 million. Now, if you put these four things together, the value of their Ethereum on the balance sheet, cash on hand, value of their Bitcoin, as well as their investments into 8Co, you will get their total net asset value over here of around $13.5 billion. However, I think for me at least, I don't really value their Bitcoin holdings as well as their moonshot investments. I'm taking those two segments as a complete write-off, and I'm just valuing their net asset value based on their Ethereum as well as their cash holdings, because their cash will eventually be used to go and purchase ETH, right? So because of that, you take out Bitcoin and their moonshot investments, what you get is a net asset value of around 13.39 or $13.4 billion. And if you divide that by the total number of shares, which is 313 million shares, you get a net asset value per share of around $42.79. Now, moving on, like I said, we're going to ignore the Ethereum staking for now. I'm just building this in for the eventuality where they announce their staking strategy. But in terms of the rate of accumulation, they made their first purchase on the 9th of June 2025. Since then, 140 days has passed. So based on the number of Ethereum that they currently have, between 9th of June and 27th of October today, what we actually realize is that the ETH per day that they're accumulating is around 23,114. Now, this number actually changes day by day, right? Or even though the market is closed. Like yesterday, it was the 26th of October. This number would have been 139 days, and you can see the ETH per day actually changes over here. So this model or this valuation model that you're seeing over here actually changes by itself as the day passes, which is why sometimes you come back in on another day, you can see slight changes in the valuation. With this 23,114 Ethereum accumulated per day at this rate of accumulation, I'm projecting out over the next 3 months, right? Until 31st January 2026. Now, I'm giving myself a 20% margin of safety. So what this means is that I'm using, okay, you can see over here, the numbers over here, it writes 80% times 23,280 because this was the number from the previous day when I was trying out this spreadsheet. So if I take 80%, multiplied by 23,114, that's how I get the rate of accumulation of 18,491.5 ETH per day. And as of today, there are 96 days to 31st of January 2026, which means they're able to add, not 97, 96. They have 96 days to add this amount of Ethereum, which means they will add around 1.7 million ETH to their balance sheet between now and 31st of January, which brings their total ETH balance to around 5 million ETH. So the assumption between now and 31st January, is that the price of Ethereum reaches around 4,500 or 4,500. The reason why I say that, and some of you may call me bearish, but I just want to be very honest over here. I'm not I'm not really deep into the crypto space. I tend to have 2 to 3% of my portfolio in crypto, and I don't really follow the technicals of the cryptocurrencies very much, right? Because I'm someone that tends to look more at fundamentals and companies in general until recently. So because of that, all I am assuming is that we get back to where we were just a couple of weeks ago before Trump's tweet basically caused this huge liquidation. So if we get back to 4,500, the value of the Ethereum on BMNR's balance sheet will be around $22.5 billion. The cash, it's a little bit hard to project out how much cash they will have on their balance sheet in 3 months. I'm just using the same amount as they're having today. This brings the projected net asset value to $22.7 billion. Now, in the bear case, we are assuming a 50% dilution from the 313 million shares outstanding. So if you remember earlier on, we said they have 313 million shares. This dilution number that you're seeing is actually based on this number of shares, right? So we are assuming an extra 50% of shares out of this 313 million and an MNAV of 0.8. This is the bearish case, worst case scenario. If that happens, the net asset value would actually be $48.50, which is very close to where we are today. But the target price would then be $38.80. This is BMNR's price. And the reason for this is the contraction of the MNAV, right? So perhaps we do see certain weakness in the economy, the market crashes, the MNAV collapses as well below 1, which you have heard the host in the podcast early on said it could be below 1 in a bear market. If that happens, 50% dilution, 0.8 times MNAV, BMNR's price would be $38, even though their net asset value is $48.50. Now, in the base case, we're assuming 40% dilution with the MNAV at 1.5, which is again where it was previously when Ethereum was at $4,500. Now, if that actually happens, the net asset value would be $51.96, and the price of BMNR would be around $77.94. Let's just call it $78. And of course, in the most bullish scenario, right, we only assume a 30% dilution, and MNAV, we are using 2.2, which is what we just calculated earlier based on what Tom Lee has told us. If that happens, right? The net asset value would stand at around $56, and that puts BMNR's price target by 31st January 2026 at $123.11. And that also means that if in the short and medium term we really do see the price of Ethereum climb up to $6,000, then it's safe to say that all of these numbers that we have spoken about will definitely increase as well. However, I think what is even more important is to understand what drives real value for BMNR. You see, in this video, we have spoken about the financial aspect of BMNR and why the finances actually work for their company. But I think it's even more crucial to understand why the entire strategy of BMNR actually works and what is their backup plan. And with that, I will see you in the next one.